TraderInsight.com. I'm Adrian Manns, and let's review the first hour trading results and focus on the fastball XRV setups for May 10th, 2018. Let me just warn you ahead of time, we are on the island. Just trying to spend a little bit of time at our vacation house before we head off for Miami Beach for the big boot camp. Going to recharge our batteries a little bit. I forgot to bring the microphone, so I'm going to record this on the computer mic, so hopefully that's not going to be too annoying for everybody. First one on the list, AIMT, Immune Therapeutics Incorporated. This one, we had a 2873 entry and a 2909 stop out. So that's very, very tight for these trades, but I just wanted to get above this range. You can see here what I'm talking about when I say don't set them so tight that they're more like targets. This could have done with a wider stop. The stop really never came into play because we did have a move 50% to the target. We got down to $28.45. Target was this green pivot line down here, and then the stock reversed and took us out right at that 28.73 entry. On the second entry, which happened around 11:10 this morning, I've got these pretty much fully automated today. On that second entry, I'm moving that stop up right above this range, $29.21. So let's give it just a little bit of room to breathe. That's just above where it inflected. Originally yesterday, I was thinking the stop could really stand to be up in here, $29.25. That would get you into this bar that caused the collapse into the close. But like I said, so far today, it's been a non-issue, just one entry, and that one resulted in a 50% to target and then a break-even stop. Next on the XRV list this morning, Blucora Incorporated, ticker symbol BCOR. BCOR opened up into the range and then dipped down below and had to qualify. So this was a case where it opened outside of my allowable slippage. So actually I've got about a 31.71 allowable open on this particular stock for the day. And that order then required that it come down. When it came down under 31.61, the order went live, and we in fact had a fill that got us up to the 32.72 target. And had I been sitting in front of it rather than having it automated, then I certainly would have, given this big bar here, tried to pull up as quickly as I could to 32.95 and see if we couldn't get a profit extension above that pivot. But no cigar on that one, just a nice move for a $1 profit objective. 30.49 was the stop that I had on this one. So it was a pretty wide stop. It was also a pretty wide target. Theoretically, this stop could have probably done with a move down just underneath this little belly right here on yesterday's trading. But given the amount of volume and everything that happened here, this collapse into the close stopped just shy of making a move lower, and it really bounced higher there. So I was pretty confident with that stop that we weren't going to get into trouble on the Thursday session. Hospitality Properties, ticker symbol HPT. This one could have been much more of a trade than it was. What I was planning on when I set it up was not to have this 27.76 be the exit, but since this was an automated trade, things don't necessarily always pan out the way that you think they're going to, even when you set up the convert to a trailing stop thing on your order entries. So sometimes those are going to work just the way you think they are, and other times it's just going to trail you out right at the profit objective anyways. This big move up above the profit target was what resulted in this one clearing out when it came back down to 27.76. This morning, this one opened out of the range and had to tick back down again just to get within the first criteria, which was that it had to be trading less than or equal to $27.49. And you can see that happen in the bottom of that first bar. All that did was activate the order and then get you in with the maximum allowable slippage, which was actually up at $27.59. So you've already got a skewed entry and then just 16, 17 cents up to the profit target. If the order would have worked the way that I wanted it to, then it would have converted to a trailing stop once the profit objective was hit, and we wouldn't have had this regression back down into the profit target after we had the move up to $27.90. But sometimes it just happens the way that it happens. Stop on this one, if you were looking down under this range, $27.07, you kind of had to be tighter on this because it does travel in sort of tight ranges. Looks like big bars, but they really don't wind up to be a whole lot. And if you were looking at the dollar values of the stops and thinking, oh, 32 cents, that's not wide enough, then you're not doing your job. You need to just look at where the natural inflection is, look at where you're expecting price to bump and then move back higher again. That's theoretically a target area, but what you want is to go beyond that target area and then focus on the fact that if it misses that bounce, it's going to start trending lower, and that's what you want to avoid in the case of a long trade. Another stock with a pretty tight profit target this morning, Kemet Corporation, ticker symbol KEM. This one, again, we opened up into the range just about where I had the allowable slippage set. So it had to get down below $20.83 in order to qualify for a stop limit order that was going to get me long the stock. So unfortunately, that meant about a 2087 fill on this one because it did open right at that max number that I had for a less than or equal to criteria. And then the move up from 2083, not a whole lot on this one, up to 2112, which I thought was going to be a very lucky target for me, even though it was small. Those of you who know me know why that 2112 number popped for me when I saw it yesterday. So a tight profit objective. The stop loss down here at $20.36 was just something that I had on as an initial stop. I was really going to look for this level up in here, $20.54. If the stock opened above the range, which it did for the morning, if it didn't open somewhere down in here, then I was going to look and see if we didn't have a test of 2054 before we had a trigger, or in this case, after we had a trigger that stabilized above the entry price. So one way or another, this is the way the money management on this one made sense to me. Very tight trade, but you got to take them where you can get them. If you're trading $20 stocks, even if you can get 20 or 30 cents per share all day, as long as they're heading in the right direction, what do you care, right? A profit's a profit. Liberty Media Corporation. This is ticker symbol LSXMA. And it did just about exactly what you would have figured it was going to do. I thought all of these were going to open in the range on the session. I kind of figured that we were going to get an open in here. That's why I didn't set a 43.11 stop. 43.11 would have been a better looking stop on this one. 43.11, 43.12, that's really the stop that you wanted on this, probably a couple pennies below because of these highs here. But the reality was if it opened in this range, you would have expected it to bounce down at least to here. So I had 42.86 on the automated trade. Stock opened and traded straight up to that profit objective. In this case, trailing stop did kick in, gets you up to $44.20 and winds up taking you out at about $44. So not a giant gain because of the trail, about another 14 cents, but it did keep you in for a little bit of the extension. Somewhere around 50 cents per share on Liberty Media was what you should have seen if you were following this up. And it wound up being a really decent trade for something that had pivots that were as narrow as these were today. The pivots, of course, are a function of the open, high, low close from the prior session. Nothing you can do about that. Sometimes those targets aren't going to be as wide as on the days that we've just got that relentless push. But nevertheless, good trade in LSXMA. MNRO, Monroe Incorporated. This one, I had a stop up at $53.30 based on this last cascading move down into the close. Let me see if I can tighten up on this a little bit so we can see what I'm talking about. So I really didn't have a good stop on this at all, I thought, but better stop would have been up above this range or even up above this range, but based on the profit objective and the fact that most of the movement had happened just in these few bars over the course of the session, still showed up as having selling pressure from identifiable market makers. So I went ahead and put it on. You can see it didn't really come back into play today. Looks like the selling pressure that happened really was all in the middle of the day yesterday, and this range that it settled into going into the close is pretty much where it's looking like it's going to settle out today. If we had a move up above this high, then originally I had anticipated we'd get a bump up into this range or above. Obviously, once this second bar of trading was put in, the thing to do was to shift that stop loss up and say 53.57 is the more logical place to have a stop on this. And then if it moves down and gets me in, well, I'm just going to have a wider swing than I originally anticipated before I get stopped out. But it didn't turn out to be an issue, and at this point of the day, I've canceled that order anyways. MNRO, no trigger for the session, at least not for me. If you took an early entry on one of these reversals, again, I'm going to say better thing to do is look for the confluence number. If you've got confluence at a pivot line, then I think the inflections are gold. If you're just looking at one of these support and resistance lines, then you really need to let the stock come to you. You need to get into trapper mode. Don't ever place an order after the bounce. Always place an order before the bounce and have your stop ready to go a couple pennies away. That's the way you stay out of trouble on those inflection trades. If it hits a level and then inflects, comes down, and you get in 5, 7, 10 cents later, your goose is already cooked, because if it reverses, now what you had as a very, very tight play from support and resistance winds up being a pretty wide play. Your profit objectives on those little bounces tend to be about 15 or 20 cents, and if it comes down 10 cents before you even get in, you just wound up turning the reward to risk ratio on a scalp play upside down, and that's never okay. So on the XRVs, we can have wider stops. If you're playing the inflections, make sure that your stops make sense. Finally, SEMG, Sem Group Corporation. This one hit the qualifier and got you into the position this morning. 25.71 was the 50% to target level. Unfortunately, as you can see, it never hit that 50% to target level, missed it by about a penny or two. This is definitely one of the problems trying to automate these things. This is a discretionary level that you could easily just wiggle around a little bit if it happened there. In any case, it would have got you back in when it came back through here, and you would be in the same position that we're in right now. Stuck in a trade that's kind of going sideways, $25.55 on a 25.33 entry. That's okay, at least it's profitable. The stop on this originally down around $24.75. And at this point in the trading session, what makes sense from your money management point of view is to bring the stop up to $25.11 or so, and then going into the closing bell, what you're going to want to do is just start ratcheting this higher and higher so that you capture some of the profit if it doesn't move in your direction, and that you avoid a loss if it winds up moving against you. So you've got this level right here that it's just balanced on over the course of the last hour or so. Drag that down to here, and you're still likely to get a bounce off these tops, but I would still say if you drag down just under this range, then what you've got is the potential to at least protect a couple pennies of profits and not wind up going into the close with something that moves down lower on you. Just make sure that you remember to close this out before the end of the session, because it looks like those automated orders are not going to trigger unless you have a conditional order out there that's closing all your positions just before the closing bell, which is definitely something I always recommend that you do. So if you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.